this morning. More on China's rate cut, the run up in the futures. My next guest says U.S. stocks are still the best place to be. Let's bring in Eaton Vance Managing Director John Moninger. Good to have you this morning.
Thanks,
where do we start? What are you watching this morning as we see these markets? Unbelievable movement in these markets.
Yeah, I mean, you have to go back to your fundamentals, and I think what we're looking for is stability in the market, and are we going to get stability? And through that stability, you're looking for sights of, what's going to happen from here. Now, I'm not sure we have a clear view yet. We've seen a big sell-off yesterday. We're seeing some activity here this morning. I think it remains to be seen. All
right, so we see this move by China when futures markets, they were up, and then they went up even more. I don't know, Charlie, what's the overall sentiment that you're talking to people all day long? You're up in that crazy, messy office of yours, talking on the phone. You're out all over the place. What are you hearing? Is this sell-off going to last?
I think the market's at a clear inflection point. You guys would know better than I would. I mean, I just talked to a lot of people, and just the sort of my unofficial survey with a margin of error of probably greater than 10% would say this, that there is growing sentiment that interventionism among central banks is not working.
Right.
And while we're getting a pop here in the market on the Chinese intervention, although the futures look like they're off their highs right now, there's questions as to whether central banks can really, around the world, can control their markets and their economies. And I think,
or whether they should be trying to control.
Well, I think it's whether they can. I mean, that's a political question that you and we love to debate, but whether they can, I think, is the issue. And I read a couple of George Soros's books. He's a brilliant guy. He may be a leftist, but he's a brilliant market guy, and he writes about herd mentalities when the market starts changing its disposition. And this intervention may be viewed in China, and maybe you can speak to this, or that this might be a bad thing long term. That the investors are that traders and investors are starting to get worried. I will say this, and you guys know this as well: stock traders are stupid. They trade off the headline.
Well, but keep in mind, George Soros also demonizes coal companies and buys them when they get cheap. But and that
means he's a good investor.
We heard Jeff Green say that when Facebook was down 8% yesterday, he stepped in and bought 100,000 shares. So at what point does this sell-off become a screaming buying opportunity for, I guess we're talking about big institutional investors at that moment.
And I think you saw yesterday, people came in and bought the markets. I mean, stocks like Netflix that have been high flyers up in the high 120s traded down to 92,
they're doing it this morning.
Buying again this morning. Apple, a lot of people are talking about. You had positive comments from the CEO yesterday. So Apple down under 100 was a buying opportunity. So I think to Charlie's point about central banks, I think if you take what our Fed did here, Charlie, versus what China's government's trying to do, two very different things, because China's halting trading in specific securities. Their market.
During the financial crisis, we did that.
We did for a very limited time in an unprecedented time. I don't know that you can argue. I think it's hard to compare U.S. versus China, just liquidity of the markets and really the health of the overall market, being a third world country, an emerging market versus our markets.
Well, I think they are us on steroids. I mean, I think in terms of what they're doing here, we didn't. I don't think our central bank actually went in and bought stocks. We bought bonds through quantitative easing to infuse the money supply. But they did a lot of the stuff that we did in much more dramatic ways. The question is, do investors globally think it's working? And I think no one knows right now. We're at an interesting point, and if this thing could turn radically negative. Yesterday I was talking about the health of the U.S. economy and why I would buy dividend stocks. But just a note of caution: this thing could turn. Today's going to be up, but just next couple of weeks going out.
You know what would be a horror show at 7 o'clock in the morning is if longer term interest rates really started moving up, because that would knock any stability out of the U.S. market.
You have a guest.
I'm
reading the Monitor. You have Martin Feldstein coming up. He spoke about this in his op-ed.
Yes, he did.
About the notion of is the market turning on the notion that central banks can make this work.
Harvard economist Martin Feldstein joins blaming the Fed. Feldstein in today's Wall Street Journal saying the inevitable result of the Federal Reserve's policies, as Charlie points out, namely quantitative easing that produced abnormally low interest rates, are at fault here. So, Charlie, you're saying you agree with this?
I don't know. I'm just saying that, he posited an interesting thesis about that the markets are turning against economies, or could be turning against economies that radically intervene, and
that's almost every one of
the major ones, including us. And it may be listen, here's the thing. He's also saying the Fed should be raising rates right now better than later. You know what I'm saying? Now, because you can't do it. You probably can't do it in a year from now when we're in a slowdown.
Right. What I look at is, as we look at where we're coming into now, I did the walk of our portfolio managers yesterday, and I was asking, what are you doing today? Are you running for the hills? Are you looking? So the number one thing was go back to the checklist. What do you need to be looking for? Fundamentals in place, or the things that you bought that still valued the way you thought they would before, and actually maybe have more value today.
Right.
Look beyond that, though, when you look for the opportunities in the market, all of them were looking for opportunities. They were going to be careful. They're going to tread carefully about where they go.
That's a problem with an ocean of cheap money around the world in recent years, is that there are no good opportunities. There's so much money. Everybody is in every asset class, in every market, and there's zero value. And I still say this is the bursting of a commodity bubble that could look at commercial real estate. Wall Street Journal is writing about that being in a bubble here in the United States.
All right. John Monninger, thank you for joining us this morning.
Thanks for having me.
All right. Those